learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in on August 13th, Friday the 13th, and China has shut down the third largest shipping port in the world today, and the stock market is boring, but we're going to have some fun today. Tomorrow's Friday. I'm going to have a little bit of fun with this watch list, so hopefully you enjoy it, but we got a lot of different keys that we need to go over today. We need to understand why the stock market pretty much completely reversed the move after the CPI and led us to all-time highs, but then we need to talk about what we've seen in August, because even though it was a big move, it has put us in a very tight range. This is actually the most boring month of the market since 2017, or except for 2017. So 2017 was kind of boring, but if we even go back to the 70s, well, you haven't seen a market month trade in such a tight range. So it's very, very interesting. And then we need to go over the news with China and what they did with their ports and a little other fun facts and pictures there. So we got a lot to talk about. I want to go over what happened in the market today, what we're looking at tomorrow, the plays that we made, and then the plays that we have for the rest of the week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life, and yes, if you love the stock market and everything about it and can laugh during the trading day, then yeah, we're the place to be. And the most important thing you need to do, post or watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, I'm actually gonna start with the company news and events, and I'm gonna try to make it a little bit more entertaining for you. But the first piece of news that happened today had to affect the market. The semiconductor index fell for the sixth straight day in a row. This is the largest downturn in semiconductors since October 2018 when you saw the Powell taper. Now, there is an explanation. They're saying that the supply-demand situation is kind of matching up, even though we're seeing that chip shortage again, and it's probably going to get balanced out after Bitcoin crashes and then everybody loses their demand for chips. Okay, that was a bad joke, but I'm blaming all of the resellers. This is your fault with the PlayStation 5s. But that was the first piece of news. The second piece here is there was a massive China port shutdown. There's no way in hell I could even say the name without butchering it, but this is the third largest port in China, and I believe in the rest of the world. Somebody could go verify that there, but this has to do with the supply chain stuff. Even the port of LA, or the Long Beach port, they're actually expecting slowdowns and saw some earlier this month, but this is kind of hinting at more and more China's slowdown economically. And then today they did have a little bit more of the clampdown. They clapped a little bit at those insurance companies. It didn't have too much of effect, but you saw some of the premiums come back in some of those other plays. We did get to talk to some people in the industry. We asked them what they feel about the regulatory clampdown, and they said they cannot complain. So that was the second piece of news. The third piece of news is Disney. They rallied after beating their subscription estimates. It was new paid additions, but I'm sure a lot of you probably forgot that after Baby Yoda, you are still paying for it. And then Airbnb did good, but they cut their guidance on a decline in booking, and it was only the guidance compared to their pre-COVID numbers, but that sent the shares down 5%. But after the cleaning fee and taxes, it probably will be back up in the morning. And then Doordash, they fell amid steep costs to sustain their pandemic growth, so those margins came down a little bit. They were spending a lot more to sustain this model. Who would have thought that paying people $2 for a delivery would not be sustainable? But we will see how that one plays out. KSU was acting very, very greedy. They're a little greedy, but they said that the CP offer isn't superior, so a lot more negotiation, the back and forth there. This one's my favorite. We got a pretty picture here, but half of the lumber dealers in the United States are now sitting on an excess inventory. You can see the month-over-month chart, even from December to January. The orange signals have excess, the gray is normal, and the blue is slightly low or very tight. You could see that's eliminated in July, but with some of the data that we got from the PPI today, it could be kind of highlighting a lot of the wackiness that we're getting with the data. We will talk about that, but if there is an oversupply, I am hearing that they may just revoke the eviction ban and just start giving people the lumber to start building. Man, I'm just coming up with these on the top of my head. These jokes suck. But another piece of news after hours, Nancy Pelosi revealed raising some of the payments for some people in government, and she's even saying that some of the aides can now make more than the members at a very, very humble pay of $198,000 a year. She did tell them, don't forget to pay the plug, and then they signed up for Nancy alerts as well. But there was that. Then Authentic Brands bought Reebok from Adidas. That one was very interesting. I did not know Adidas even owned Reebok, and we are still waiting to hear if Authentic Brands is going to bring back the LA Gears, the Filas, or the Shaqs. So that was interesting. Adidas stock did move today. Another piece of news on the antitrust front, FTC Khan, she wrote a letter to Elizabeth Warren, okay? Like, I'm not even joking about this one. Just actually think about this right now, that there is somebody writing a letter to Elizabeth Warren giving her an idea to block and do more stuff. So it's absolutely crazy, but it could have a good effect. We'll see. But she sent a letter to Warren saying that she wants to block more M&A deals rather than trying to fix them. So here in the States, what they've been doing, they call it like a behavioral modification, I believe, of the behavior of companies. Instead of outright denying an antitrust company or a merger, they will analyze the deal and they'll try to fix the deal to make it work, saying you should spin off this, then this. But now the FTC Con, she's a very big antitrust proponent. She's saying that the FTC should just block them in general. So that was interesting. And then finally, the CIA weighs creating a special China unit to outspy Beijing. So could have some implications. This could be hinting at a little bit more of the escalation with China. Again, that is very important in all seriousness, but it is kind of comical that they had to go to the New York Times or Washington Post to say how secret, covert. I mean, you get it. All right, but jumping back to what we had here today now, as far as what you saw in the market. Now, this is all serious. I'm not going to joke about it. Today pretty much reversed a lot of what you saw from both the trading action, what you got in bonds, and then even the data in essence. But like I told you at the beginning of the video here, we are still trading into a very narrow range. And what we talked about yesterday, low volume, kind of still that summer slowdown. Everybody is still waiting for Jackson Hole and what is going to happen. Now, on the side of the data and what we saw, the PPI and jobless claims, it literally had the opposite effect of the CPI yesterday. So CPI came in line. That was great and all, but the PPI, the producer price index, that is now trading solidly above 6. I want to say the 6 is the core, and without core, it's even at 7%. So that means the price for producers, not consumers, that is actually going up. It just has not been passed on. The question is yet or if, and then on top of that, the PPI missed expectations by 100%. So they were pricing about 0.5% month over month increase. They all came in about 1% total. So that goes back to what we saw over the last few weeks. You're getting some of that variance in the pretty much analysts being wrong, and that's showing that volatility. But now as far as how it really did the reverse of yesterday gave a really, really good basis or validation to the transitory argument. But now with the producer prices coming in really, really hot, that doesn't mean prices haven't gone up. It just hasn't been passed to the consumer. And then jobless claims was even lower today. So all of this is kind of data that could say, okay, maybe we should taper soon. Yesterday's CPI said, okay, maybe the Fed has a good finger on it and they don't have to go too quickly. So that's why you got a lot of flip-flop from yesterday, even as far as the industry's value versus growth and all of that. Coming into tomorrow, though, the final thing we got to be looking at, it's going to be the consumer sentiment. So it can have some effect, but with this range and what we're seeing and how things are not moving, the real big effect that I'm looking for is going to be velocity. If you see velocity in the market, in the bonds, in the dollar, that is going to be the things you want to watch for, because even if you look at the market here today, a lot of these moves, even though we're going towards all-time highs, they are not showing any quick velocity. It's not a quick move. It's kind of edging up there, and then you see the day before, you're not really getting a clear-cut direction with breakneck speed that's kind of showing people are rushing into stuff. It is still trading pretty low, and then you have that whole Marshallian and liquidity argument that we got yesterday. So our work is definitely cut out for us. Hopefully we have a fun Friday. We got to watch what's going on over overseas, any escalation, and then the speed at which August is going to finish out until we get to Jackson Hole. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 stacks that I'm looking at coming into tomorrow. 2 of them, I actually own all of them. I only have 1 share of Disney. That is a fact. But we have plays on the other 2. I did add more to the long term. We made an after hours trade, but the first one is Airbnb. I bought 10 more shares for the big long term at 147 after hours. It ended up falling more, so we're going to watch that in the morning, but I am going to be watching this for a continuation on the Friday earnings play. It has everything from travel, recovery trade to now earnings, and we're seeing where we're at with the market in general. I think it's going to get a lot of moves, I hope, but even on top of it, Airbnb has a pretty limited history. You've only got 2 other earnings reports since this company has been publicly traded, and after every report, this stock has moved no less than 6% or 6% on average. So I really like Airbnb. We talked about it. If I get a good price, I will probably buy some more on the long term. We will see how things play out, but that is going to be the first play. The second play is going to be Disney. I really like it because it did have a good report, and if it shows some strength coming in tomorrow, you've seen some of these companies, think Snapchat, they had a good report. It lasted all day, but then it kind of fell off the next day, so I want to see if it's going to play out like that. But if you do get strength in the morning and it holds up these gains, it will be a solid consideration for tomorrow, just given some of the past earnings moves that we've seen. So I really like Disney. Going to be watching that for a Friday play. I will get time on it. I think we could take more advantage of it, but it could also be one of those credit spread plays as well too. But that's the second play. Then the third play, I'm really liking how it's setting up, and I'm sure based on the chart, the movements have created a little bit of an opportunity with the options. But DraftKings, the run has just been solid. They had their earnings. They had all of that stuff. They had the buyout. They've been holding up, but this is what I mean. It's been like kind of going up but then coming down, kind of going up and then coming down. So you're seeing how it's breaking out here. The $55, $60 level is very, very important to DraftKings. So I really like it. Again, it hasn't been too fast. And on top of it, today we did get Canadian gaming news that they're going to legalize single bet sporting events or single bet sports. I don't know what it is or how to say it. But the thing is, they don't have much exposure to Canada. I know Penn does. So I want to see how they play out. It's not too important just yet. They may have a little bit of time, but we will see how that plays out. But it had overall just good momentum this last week, so I like it. But those are going to be the main plays. As far as everything else, watch UWMC Arquite. They had earnings and they shot up, so if they bring their little cousin with them, that will be cool. Watch them. Watch Amazon. They finally came up today, but this was a big move round trip. They were almost down another 1%, so I would even use them as a barometer. Remember, they're coming off that earnings and you had that eBay stuff, so that was interesting. But Apple, they really made back a lot of this week, and this could lead the SPY a lot. They're coming back up here. Want to watch it Friday, but this definitely puts them in a very interesting spot. And then Doordash going to look for the earnings continuation. It was a pretty big drop. This company has the ability to move, but the contracts are usually expensive, so I'm hoping tomorrow on Friday they are able to get cheap, but not too cheap. You get what I'm saying. But watch them. Watch Boeing. We got that play. I want to see how they play out just in general with travel in the Dow, but I think they could be a really, really good key to watch. Datadog, they came up today, and I'm using this as a sign, and even when you look at the daily, it's not a bad chart, but those contracts are only up 18% now for September, so they have definitely decayed. That momentum is slowed. It might create a good double dip opportunity, so we'll see. Watch Nettings. I'm down 50% on all of those K-Web and Netties plays. I still like them. Thankfully, some have a little bit more time. The ones that don't, the August, that makes sense why they're down so much, but the thing I like about it, or the things that makes it difficult, you're getting this news, we're getting the developments, but when you're watching the premiums, how we caught some of the move and then it bounces up, it's literally like trying to buy insurance on a house that is already on fire. So the premiums that they're charging and then what it's going to be worth and the deductible, all of that, that's what you're really figuring out when you're buying some of these options, and that's what is making it tricky. So we will see, but still like those plays. They will definitely come up at some time. In the Uber, I want to watch as a sympathy to DoorDash, see how they get affected, and even just they're coming back down to this bottom here. We like it for the long term, so if Uber does drop a little bit more than Airbnb tomorrow, maybe we pick that up, or maybe we still decide to wait. And then finally, TLT and the dollar. TLT came down again. It still put us in that same range we were talking about, but it did not move as much today. And at one point, the SPY was going inverse, and then they matched up, but then the trend kind of broke here. So we really want to watch this coming into tomorrow. But again, the real key is the dollar here. It's starting to increase, and there were some articles saying people aren't really believing in the rally of the dollar. But one thing you could kind of look at here on the 1 year, you can see how important this level is. Think March, April. In our market, you saw how it behaved. The dollar was at the same price a couple weeks ago. Dollar was at the same price. The November move leading into the end of the year, right before we started to really rally, dollar was at the same price. The October before that, when it got volatile, dollar was at the same price. Coming into the June, July, August the last year, you pretty much had the dollar at the same level when we kind of went from reopen to back to close again, or that 50% capacity thing. So this is a key level. The key is going to be velocity, but a lot of people are just waiting. They think it's going to stay in the range until Jackson Hole. If anything happens before that, we will be able to position. Otherwise, it is going to be wait and see. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure to post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need to remember what you're doing it for. Oh, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.